Alright, picture this. You're scrolling through your phone, maybe late at night, and you see an ad, a kid, probably around 10, grinning ear to ear, holding a digital tree. And the caption says, "Start investing in your child's future today." You think, wait, can I even do that? Can I actually open an investment account for my kid, like, right now? That little seed of a question, that's what we're diving into today. Because let's be real, the world our kids are inheriting isn't exactly a financial playground. College costs are skyrocketing, housing markets feel like a distant dream, and the idea of retirement? For some, it's practically a myth. So, naturally, we want to give them a head start, a financial safety net, a chance to build wealth from the ground up. And that's where Acorns comes in. It's that app you've probably seen, the one with the cute squirrel mascot, promising to simplify investing. But can it really be used for your child? Is it even legal? Is it a smart move? Let's break it down, step by step, and figure out if Acorns is the right tool to shape your child's financial future. Now, here's the thing, Acorns itself, in its standard form, isn't directly designed for minors. You can't just open an Acorns Invest account in your child's name. The app is built for adults, 18 and over, with a social security number and all the usual adulting requirements. But that doesn't mean you're out of luck. There's a clever workaround, a way to leverage the power of Acorns for your child's benefit, and it revolves around the concept of custodial accounts, specifically UTMA/UGMA accounts. What are these alphabet soup things, you ask? UTMA stands for Uniform Transfers to Minors Act, and UGMA stands for Uniform Gifts to Minors Act. Essentially, they are legal frameworks that allow adults to manage assets for a minor until they reach a certain age, usually 18 or 21, depending on your state. So, how does this connect to Acorns? Well, you can open a UTMA/UGMA account with a brokerage firm that integrates with Acorns or allows you to manage it in a way that aligns with Acorns' investment philosophy. You become the custodian, and your child is the beneficiary. You then link this UTMA/UGMA account to your Acorns account, using Acorns features to invest the funds within that custodial account. Let's clarify this process. You're not opening an Acorns account for your child, you're using Acorns to manage an account on behalf of your child. This is a crucial distinction. Now, let's talk about the benefits. Why go through all this trouble? First and foremost, time is your greatest ally when it comes to investing. The earlier you start, the more time your money has to grow through the magic of compound interest. Let's say you invest $100 a month for 18 years, and you average a modest 7% return. That initial investment could grow to a substantial amount by the time your child reaches adulthood. 1. www.dinksfinance.com www.dinksfinance.com. And Acorns makes it easy. Their roundups feature, where it rounds up your everyday purchases and invests the spare change, can be a powerful tool for consistent, automated investing, even for a child's account. Imagine every time you buy groceries or gas, a few extra cents are automatically invested into your child's future. It's a painless way to build a portfolio over time. Plus, Acorns' diversified portfolios, built with ETFs, exchange-traded funds, offer a level of diversification that can be hard to achieve on your own. You're not picking individual stocks, you're investing in a basket of assets, which can help mitigate risk. But it's not all sunshine and rainbows. There are some important considerations to keep in mind. First, taxes. UTMA/UGMA accounts have specific tax implications. The kiddie tax rules might apply, meaning that a portion of your child's investment income could be taxed at your higher parental tax rate. It's crucial to understand these rules and consult with a tax advisor to ensure you're doing everything correctly. Second, control. Once your child reaches the age of majority, they gain full control of the assets in the UTMA/UGMA account. This means they can spend the money however they want, even if it's not what you had in mind. There's no guarantee they'll use it for college or a down payment on a house. Third, financial aid. Assets held in a UTMA/UGMA account are considered the child's assets, which can negatively impact their eligibility for financial aid. Colleges typically expect a higher percentage of a student's assets to be used for college expenses compared to parental assets. Fourth, Acorns fees. While relatively low, they can add up over time, especially if you're managing a smaller account. It's important to factor in these fees when calculating your potential returns. Fifth, the emotional aspect. Investing for your child is a long-term commitment. You need to be prepared for market fluctuations and resist the urge to panic sell during downturns. You need to be a role model, demonstrating responsible financial behavior. Now, let's talk about alternatives. Acorns isn't the only game in town. There are other brokerage firms that offer UTMA/UGMA accounts, and some even specialize in custodial investing. You can also consider 529 plans, which are specifically designed for education savings and offer tax advantages. Choosing the right option depends on your individual circumstances, your financial goals, and your child's needs. Do your research, compare fees, investment options, and tax implications, and choose the platform that best aligns with your values. Let's go back to that initial question: can I open an Acorns account for my child? The answer is, technically, no. But you can use Acorns to manage a custodial account for your child, giving them a valuable head start in the world of investing. It's a powerful tool, but it's not a magic bullet. It requires careful planning, a long-term perspective, and a willingness to navigate the complexities of taxes and regulations. And remember, investing is just one piece of the puzzle. Teaching your child about money management, budgeting, and saving is equally important. You can use Acorns as a starting point, a tool to illustrate the power of compound interest and the importance of investing early. Ultimately, the decision of whether or not to use Acorns for your child is a personal one. There's no right or wrong answer. It depends on your unique situation and your financial goals. What's important is that you're thinking about your child's financial future and taking proactive steps to help them achieve their dreams. That's the most valuable investment you can make. With that said, thanks for watching, and until next time.